You're away from your desk. An unexpected economic report drops and the market spikes. You need to manage an open position right now. You pull out your phone, but your standard broker app freezes. The chart lags, and when you finally tap to close the trade, the app hangs mid-order. If you are managing a prop firm-funded account, that lag is a direct threat to your capital and your strict daily drawdown compliance. The App Store sells the idea of trading from the beach with a single tap. The reality is that basic apps strip away the exact drawing tools and multi-timeframe analysis you rely on to make informed decisions. You have a choice to make. You either accept the friction and learning curve of a complex professional platform, or you suffer the hidden liabilities of a simple one. Relying on a visually clean but underpowered mobile app forces you to make underinformed decisions, turning your phone into a liability. To see what separates a standard app from a pro ecosystem, we need to compare them side by side. Look at this first row measuring execution reliability. A pro ecosystem prioritizes ultra-low latency to prevent slippage over maintaining a minimalist aesthetic. Moving to the second row, we compare analytical tools. A basic line chart is useless when your strategy requires layering multiple indicators across different timeframes on a small screen. We are going to evaluate the specific features that actually justify the time and cost required to migrate your accounts to a new platform. The objective is to dismantle the marketing noise and isolate the exact technology that drives mobile profitability in 2026. This flowchart maps the lifecycle of a trade moving across your devices, from analysis to management. Notice the data parity here. When using a cloud-synced platform, drawing a support level on a desktop monitor means that exact line appears instantly on your mobile chart. The trade-off for this level of synchronization is strict ecosystem lock-in. You lose the ability to easily broker hop without completely rebuilding your custom templates. Then there is the user interface. Packing complex order management onto a 6-inch screen introduces immediate design constraints. A professional UI solves this by letting you place a pending buy limit, set a stop loss, and map out partial take profit levels in a single chart-based action. Providing this level of control results in a denser interface, with visual clutter and a much steeper learning curve than consumer-focused apps. Mastering that complex interface is the required price of admission for carrying desktop-grade analytical power in your pocket. Staring at a mobile screen all day leads to decision fatigue. Proactive technical alerts allow you to step away without losing control. Instead of relying on simple price triggers, you configure conditional indicator-based alerts, like a notification exactly when the 50 EMA crosses the 200 EMA. The friction here is that advanced automation requires precise upfront logic configuration. A mistake in your settings means missing a valid setup entirely. When you are managing live capital, ironclad security backed by top-tier regulation from authorities like the FCA or SISEC is mandatory. This translates directly to mandatory biometric logins and two-factor authentication, preventing unauthorized access to high-value prop firm accounts. Look at execution latency. Optimized data protocols eliminate the 2-second delay that typically causes 10 to 15 pips of slippage during a volatile NFP release on a cellular network. The added seconds of friction during a 2FA login are mathematically justified the moment you eliminate slippage and secure your capital. This total cost of ownership document breaks down the hidden financial costs of premium features compared to the compliance tools you require. Accessing Level 2 data and integrated news squawks often requires paying tiered subscriptions or accepting different commission structures for mobile execution. In exchange for that cost, you gain access to integrated real-time drawdown dashboards, which are mandatory for adhering to strict prop firm daily loss limits. This integration increases your monthly operating overhead. That expense must be offset directly by improved compliant trade outcomes. You should not default to free apps. Calculate if the true cost of premium analytical tools provides a measurable return on investment for your strategy. True value is found in transparent pricing structures that guarantee institutional-grade reliability. We can map these trade-offs directly to your profile. This chart plots strategy complexity against your requirement for capital protection. If you are a casual trader making discretionary, set-and-forget investments, your profile fits here. For this group, the complexity and potential data fees of a pro ecosystem yield a negative ROI. If you are an intermediate to advanced trader managing a funded account or relying on multi-time frame analysis, you belong in this upper right quadrant, the Pro Ecosystem Zone. This is where the institutional-grade infrastructure provided by FXNX and NXAI matches your precise requirements. Operating in this zone means utilizing zero-pip spreads, ultra-fast execution, and seamless desktop-to-mobile syncing. The upfront friction of migrating to a platform like FXNX is not an optional convenience. It is a mandatory investment in your long-term trading survival. Evaluate if your current app is actively putting your capital at risk, and choose the digital command center that matches your strategy.